Well, good morning, and thank you everyone for joining us again for another awesome presentation this month from Bank Cherokee on the ins and outs of SBA loans. Today we have an incredible guest speaker, Brian Barlow, who is a commercial lender here at Bank Cherokee, and he does a lot of work and a lot of business in the area of SBA loans. So we're going to have a really in-depth, great presentation. I'd like just to do a little housekeeping. We really like the presentations and the webinars to be informative, and we want you to get some value out of it and get your questions answered. And so we like the format as we go along is please go ahead and in the question boxes, enter your questions, and throughout the presentation, Brian will be able to answer those. You don't have to wait until the end. If they seem like they're timely and we talk about something that you would really like to get a little more detail on, just go ahead and put the question in, and then we'll address those questions as we go. And if we have some at the end that we haven't gotten to yet, we'll do that at the end as well. All right, so I'm going to let Brian go ahead and do the presentation on the ins and outs of SBA loan, and I'll come back at the end, and hopefully you can get some real value out of this, which I think you are going to. Brian, go ahead and take us away.
All right, thanks, John. Thanks for having me on, and thanks, everyone, for coming here today. We're going to talk a little bit about our SBA lending today. Is my thing available now? So the SBA was created back in 1953. It is a government agency. It's at the federal level. Basically, the SBA helps businesses acquire financing that they normally wouldn't be able to find in the market. There's multiple types of SBA loans. Today we're going to talk generally about the 7A and the 504 loans, the PPP, the EIDL, and the RRF, Restaurant Revitalization Fund. Those have been in the news here in 2020 and now in 2021, but hopefully we won't have to be dealing with those going forward in the future. Here at Bank Cherokee, we are a preferred SBA lender, which means we get to do all of our underwriting and make all of our own decisions here at the bank. And we're able to process both the 7A and the 504 loans. We've been a top 25 SBA lender here in the Twin Cities for the past few years. The SBA fiscal year runs from October 1st through September 30th. And here at Bank Cherokee, we do have the SBA department, a dedicated SBA department with about 50 years of experience. So a lot of different types of, I missed one there, sorry. Today we're going to talk about the 7A and the 504 loans. The 7A loans are primarily used to purchase equipment for working capital, for buyouts, and business acquisitions. The 504 loan is used for purchasing primarily real estate and can allow borrowers to put as little down as 10% and can get them some long-term fixed interest rates. Both the 7A loan and the 504 loan have a maximum project size of about $5 million, and they can both either be processed through a PLP lender or through the general program, SBA program. The difference between the PLP and the general program is you're going to get a much faster approval process through the internal process here at the bank, as opposed to the general program, which sends off the loan packet to the SBA to get full approval.
Brian,
to be an eligible industry, you must be a for-profit business, but outside of that, we're able to work pretty much with any sort of industry. In the last 6 months.
Hey, Brian, I'm sorry, this is Landon. Quick question for you. Can you just tell us what PLP stands for?
Yes, I'm sorry. It's the Preferred Lender Program. So, and what that means is that Bank Cherokee has done an extensive SBA training and has a lot of experienced lenders in place that have already passed the certifications and regulations that are needed to process SBA loans. So basically, the SBA has said we are, they trust us enough to make our own SBA loans, and we do get audited and reviewed regularly on that, and we always have a passing score.
Great, thank you.
Yep. No problem. So as you can see, we've worked with a lot of different industries here in the past 6 months: construction, medical, retail, hospitality, fitness centers, franchises, automotive, manufacturing, technology. Franchises are a very good SBA option as long as that the franchise is on what's called the SBA Franchise Registry. And that just means that the franchise has been recognized by the SBA as having a very good franchise model. A bunch of different types of transactions that we can do here through SBA loans. A partner buyout, working capital, leasehold improvements, purchasing owner-occupied real estate, business acquisitions, expansion and hiring and equipment financing. We really can do it all. The SBA program really helps cover the gaps in collaterals, especially when it comes to like technology, some of the soft costs, installation, delivery, and so on of certain products. Some of the benefits of the SBA program are the longer amortization. Startup businesses, we can do startup businesses, projection-based loans. There's less owner equity required. The guarantee fees are waived currently through the CARES Act through 9/30/2021. And if you get an SBA loan right now and it's fully funded by 9/30, you can get the possibility of getting 3 months worth of payments made on your behalf by the SBA. Those payments are capped at $9,000, but it's still a great benefit that the SBA is currently offering. The process. So, you start with talking to your lender about your plans. If it's a startup business or if it's a existing business, there's going to be some different requirements. One great question to ask is if your lender is a preferred lender. Otherwise, it's probably going to take a little bit longer. And also, what are the fees going to be? Are there packaging fees? What are the SBA fees? As I mentioned earlier, the SBA fees are currently being waived through September 30th. However, they generally can be a percentage of the amount that is being borrowed outside of this 2020-2021 CARES Act program. So the financials that are required, it does require basic underwriting just like any other conventional loan. So we do request for existing businesses 3 years of business and personal tax returns, 3 years of the business financial statements, profit loss, balance sheet, accounts receivable, inventory lists, any sort of pertinent financial information, year-to-date financial statements, and then what we call the personal financial statement, which is just a breakdown of the owner's assets and liabilities. For startup businesses, we require a business plan and we require 3 years of projections. For the first 2 years, we do like to see a detailed month-by-month projections. For the third year, we can kind of take a look at more of a summary, high-level projections. We still want to see the 3 years of the personal tax returns, and then we want to see the personal resume, and we want to make sure we understand why this person is getting into the business and get some understanding of the management experience and so on, because that part of it is very important to make a credit decision for us. And then again, we need the personal financial statement from the owner. Some of the additional documentation that we will be requiring outside of a standard loan is the SBA 1919 eligibility application. And basically all that is some additional questions regarding who you are and your ownership abilities and all that sort of stuff, and making sure that there's no issues with your background through the SBA. The 4506 is the income tax verification. It's just making sure that the information that you provided us is the same information that you provided to the IRS, so we're able to make a educated credit decision. And then if you own other businesses, there is what's called the affiliate businesses. And so one of the things that we'll do is take a look at all the different affiliates businesses that you own, and we'll request financials, and then we'll have to make sure that you are under the standard sizes for the Small Business Administration for those industries. most businesses do meet those requirements. Some possible collateral requirements. One of the things we talked about was the SBA it helps with shortfalls in collateral. However, they do want to exhaust every possibility in getting as much collateral as possible. So, one of the things we talk a lot about is life insurance, key man life insurance. In a lot of cases, we'll want to get a life insurance policy that's assigned to the bank in the same amount as the loan. Also, the SBA requires second or third mortgage on any sort of real estate if there's any more than 25% equity in the property. So that's another way to try to shore up some of these shortfalls in collateral for some of these startup businesses. Some of those shortfalls in collateral, I think I mentioned earlier, but it's the goodwill, it's the depreciation, installation and software costs and so on. So, and outside of that, Bank Cherokee has been around since 1908. We're a small bank delivering big bank products. We've maintained our roots here in St. Paul for the last 112 years, and we're looking to keep doing that going forward. I'm Brian Barlow. I've been with the bank here for now over a year. Born and raised in the Twin Cities. Love working here at Bank Cherokee and working and helping all the small businesses achieve their goals. And that's about the end of my presentation. So I'll open it up for any questions.
Brian, we do have a question. How long does it typically take from application to funding, assuming timely return of all documentation? How long does it typically take?
That's a great question. Because of our preferred lender status, once we approve the deal internally, we go out straight to the SBA and we can get that SBA application. Our internal turn time is, somewhere between a week and 2 weeks generally. So, that's probably about as fast as we can get a deal done. But yeah, because of our PLP status and our experience, when we are ready to go with an application for submission, we can turn them really, really quick.
Let's see, we do have another one. Could you give an example of a deal you have done recently using SBA? And why did you use SBA?
Sure. Well, it's startup businesses, business acquisitions. Those are a couple of the big ones. We did one where there was a partner buyout. So we had a silent partner, and the guy who was operating the business on a day-to-day basis wanted to buy his partner out so he could enjoy the full benefits of his work. There was a gap in short collateral there. It was a lot of goodwill because the business name meant a lot and had done well over the last few years, but there just wasn't the collateral. We were able to make it work with the life insurance, the home equity, or the second mortgage on the loan, and then the SBA product, 7A loan. It was a 10-year term, and that deal closed back in right at the end of 2020. The most recent deal we did was a business acquisition of a logistics company. And again, it was a big shortfall in collateral. Even with the pledging of the equity and stuff like that, there was still a major shortfall of collateral. But because the business cash flows and, the business owners themselves had very strong resumes and strong experience, we believed in the project, and we tapped into the SBA again to cover that shortfall in collateral. And this customer actually was able to benefit from the current CARES Act payments, and so they were able to receive $9,000 for the next 3 months for their payments because it was an SBA loan, and they also didn't have any SBA guarantee fees or anything like that. So it's been a really great program to help the businesses, because had they not had the SBA, the deal would have gotten a lot more complicated, and there would have been I don't know if we would have been able to do it. And that kind of goes back to the same, the partner buyout that I referenced at the end of 2020. You know, it's one of those things where the SBA really steps up and helps a strong business, but just doesn't quite have the collateral or have the strength on their own to get it over the finish line. So.
We have another question, Brian. This is an interesting one. Is there any alternative to the 3 years of tax return? For example, 2019 was submitted late and the IRS is behind, even though 2018 are done as well as 2020. So any alternative for somebody like that is in that position?
That's really tough. You know, the SBA, it's a government agency, so there's not a lot of leniency when it comes to working with them. You know, they like their I's dotted and their T's crossed. So, you know, I think 2019 would be required. I think everyone right now is, you know, extending 2020 based on the PPP and all that. So that could be an explanation, but I do believe that 2019 would be required at this time.
Great, thank you. We do have another question. Oh, just a second. We've got quite a few, so hold on. What about interest rates? Are they high like credit card rates?
No, you know, the great thing about the SBA loans is they are still priced at, you know, conventional bank pricing generally. So, you know, an operating line of credit, which we could do through the SBA, would give you a rate, you know, somewhere between probably 4% and 6%. You know, so all of our loans are very, very competitively priced. And just because it's an SBA does not mean it's going to be much more expensive or anything like that than a traditional loan. So no.
Another question for you. Would a 504 loan be available for investment real estate or only if the borrower has a business in that real estate?
No, that's a great question. 504 loans require it to be owner occupied. So that means that it has to be 51% occupied by the entity, by the borrowing entity. But then the other 49% could be leased out theoretically and still qualify for an SBA 504 loan.
All right, I am caught up on questions. We can give it a little bit more here if anybody else has additional questions for Brian. Well, we do have one. What are the interest rates now for a 504?
Well, that's a good question. So the 504 program it's a kind of an interesting program where the bank actually takes about a 50% mortgage, the SBA takes a 40% mortgage, and then the borrower puts about 10% down. So the bank's rate, it will vary. The first 50% mortgage, that will have an adjustable rate. Obviously, it's going to be very competitive. But the SBA's 40% there, that portion is going to be fixed, which is one of the benefits of the SBA 504 program. Currently, you know, those rates are at historic lows. I don't know what they are off the top of my head right now, but I know they were down in the 3% for a 25-year fixed term about a month and a half ago. So, you know, they are very, very competitive and very attractive for a long-term rate. Now, that being said, that is still just at 40%. So the 50%, our first loan, that rate will still adjust. But again, it'll be a very competitive rate.
Great, thank you. Oh, we do have another one. Which loan is paid off first in a 504?
They're paid off at the same time. So you actually make two different payments. You'd make one to us and one to whatever it's called, the CDC, Certified Development Company, that would process that 40% loan payment for you.
Lots of great questions. Thank you, everyone. We can keep it open here a little bit longer.
Brian, it's John. I have a quick question that I see. I'm wondering if you could explain a good example between someone who has real estate and doing SBA loan, or a business that doesn't have any real estate, and if that really differs in how SBA looks at the customer's profile.
No, the thing with the SBA when it comes to collateral and all that, it's the SBA requires as much collateral as available. So if you are a renter, or if you don't have equity in your property or anything like that, the SBA can't require it and won't deny your loan based on that. But if you have it, they will request it. So it's one of those, the more you have, the more they're going to ask for. And the less you have, the less they're not going to ask for. So it's not a determinating factor of are they going to do the loan or not. It's just a matter of how much collateral is available. And the collateral piece also does depend on the size of the loans. So if the loan's a smaller loan, there's going to be a lot less collateral requirements than if it's a larger loan. And that cutoff is usually about $350,000.
And did you mention or say anything? Did you say SBA is less expensive than a traditional commercial bank loan, or about the same cost-wise?
They're about the same as far as interest rates go and stuff like that. Currently, because the SBA is waiving all of their guarantee fees, packaging fees, origination fees, and so on and so forth are generally priced about where they would be for a conventional loan. Which would be non-SBA. Outside of this year and last year, when the SBA does charge their guarantee fee, then it can be a little bit more expensive in terms of fees. But the rates are always pretty competitive. So.
We do have a couple more questions that came in, Brian. Can sweat equity be used as down payment or collateral?
It depends on what it is. If you're doing the build out yourself and you're able to add value in a tangible way, and we're able to document that, then I would definitely say yes. If you have equipment that you're adding to the project, I guess we did a orthodontist loan where she bought out an existing practice and was bringing some of her equipment to the new facility, and so that was part of her equity injection, if you will. So she didn't have to come up with cash because she already had the equipment. So we were able to use the value of what that equipment was for her down payment equity injection for the overall project. So yes, sweat equity or other types of assets can be considered, but it generally needs to be some sort of tangible thing.
Great. Does the collateral make a difference in the interest rates?
Yes, just like in any sort of lending, the more rock solid the collateral and also the loan to value position. So real estate compared to a specialized piece of equipment is going to have a lower interest rate than I don't even know, some sort of magic digging machine or something like that. And it's all about the resale value is kind of how the bank takes a look at things and says, how quickly, easily can somebody else move into this thing compared to something else. And there's more risk if it's not easily movable. So.
And we do have another question. Does the down payment make a difference in fees or interest rates?
Not in interest rates, no. The down payment will make a difference in the total overall guarantee fee costs if going forward, because the guarantee is a portion of or the guarantee fee is a portion of how much the SBA loan is for. So the larger the down payment, the lower the fee would be, technically, but it's still going to be dependent on, it's a percentage of the loan overall is what the SBA fees generally are. So it would just be in proportion to what the loan amount is going to be.
Again, everyone, lots of great questions. Thank you. I do have a question for you, Brian. Are you seeing scenarios where it makes more sense for a business owner to go with an SBA loan versus a conventional loan, even if they do qualify for a conventional loan?
Well, if they qualify for a conventional loan, it's more of a challenge for us to make the SBA argument per se. But one of the ways that's able to work is, we have our conventional loan policy, and we generally have shorter amortization than the SBA on all of the equipment. So if a borrower has a large piece of equipment or something like that and could qualify for a 5-year term with us conventionally, well, they could go to the SBA and get a 10-year term. And so, that would be a huge benefit for somebody for spreading out those types of payments and that kind of thing. So we've always got to justify why we use the SBA for our loans. But there's definitely a lot of options, or definitely reasons to do it. And that amortization is a big one. So.
Great, thank you. All right, I am not seeing any new questions.
Brian,
right.
can you answer, is it matter if a property or a business is owner occupied? Is that an SBA rule, or that is actually not required for me to do SBA loans on property?
It's required to be owner occupied.
Mm-hmm. And how about, it seems like there's a lot of loans related to women and minority businesses right now. Is that part of SBA, or is that something that the bank just would do, or how do you think that would fit in between traditional loans and SBA loans?
Well, the SBA has done different programs in the past for women and minorities and special interest groups, veterans, and that kind of thing. Currently the SBA is out there really promoting the SBA, trying to get money back out into the economy, helping small businesses. So, to your question, the SBA is, a great opportunity for anybody who's got a startup business, who doesn't have a ton of capital. So, that can, historically, I guess, has been the women and minorities and that kind of thing. But there aren't special programs or anything like that. No, it's open for everybody.
Excellent. Landon, any other questions there?
We don't. It appears we have answered them all. Great questions, everyone. Thank you.
Excellent. All right. Well, I want to thank Brian. As you can see, there's a lot to know in the SBA and commercial lending world. And by having an expert in the banking industry such as Brian to help us go through that, you can see that can really be a benefit to us and our businesses. So again, thank you, Brian, for that detailed information and answering all those awesome questions. For those of you who are bank clients, you probably already understand and know that Cherokee Bank is actually the oldest family-owned metro bank. We've been around since 1908 and would love to speak to you and talk to you more about some of the things that Brian talked about today, and to see if an SBA loan is a good fit for you. Please visit our website, www.bankcherokee.com, or reach out to Brian or anyone else at the bank here. If you'd like some additional information, send us a message or give us a call. We'd love to talk to you about that. And also like to mention that our bank is run by our CEO and owner, Heidi Gazelle. So we are actually a women-owned business as well. So I'd like to mention that as well. So again, thank you for joining us today. We'd like to do these on a monthly basis. If there's a topic that you would love to hear more information about that would help your business grow and give you more information on something you're trying to accomplish, let us know about it, because we'd love to have that be one of our topics. And so again, we'll see you next month when we have our next webinar on something related to your business and financial banking. So again, thank you, Brian, and thank you everyone for joining us today.
Thanks, John.
Thanks.